In today's video I want to share with you a live trade in the Euro 15-minute that happened yesterday. This analysis serves to show you that there is a lot more than what meets the eye in the markets. We can find many different ways of entering and exiting a trade with the limited amount of information that price action gives us. In this example I will also show you once again the idea of mirror lines and sloped support and resistance lines to pinpoint the market edges. From market vector number 1 to number 2, we have the major flow creating a higher high and a higher low, which renders low number 1 as solid and confirmed market structure. After number 2, price starts to lose its upward momentum, and begins its journey to find the hand of the buyers who shot it up from number 1 to number 2. In number 3 we can see that price reaches the buy zone that is naturally produced together with a solid market structure. After that, price naturally begins to rise again. Up to this point, there is nothing interesting about this market. Price action is doing what it naturally does when it's not suffering any sort of intervention or distortion. However, in number 4 things start to get upside down in one single candlestick. Candle number 4 is an unusual candlestick formation, and I will not give it a meaningless name or anything like that. I will analyze it with market logic, so you can understand what I mean. The thing that stands out the most about candle 4 is its upper tail, which is not only disproportionately large, but it also pokes an important level on this chart, which is the high number 2. In the upper tail of candle 4 is also implicit that buyers opened the door of high number 2 and were immediately faced with vicious sellers waiting to battle. As a natural consequence, candle 4 closed far away from its high as a result from seller pressure. Candle 4 poked the high number 2 and did not close above it. This can sometimes trigger some sort of manipulative chain of events, but we are not going to analyze that in this example. The essential point I'm trying to make here is that one single candle can tell a whole story about a market if you're willing to understand what it truly means. The idea for the short trade you see opened in this chart came when candle number 5 appeared, which was a final and objective confirmation of the story that revolved mostly around candle number 4. Candle 5 is a fractal candle pointing downwards, which perfectly matches the story of candle 4. Candle 5 is also a smaller version of candle 4 in some ways. Observe that candle 5 pokes the high of its immediately previous candle, and then closes in the lower portion of its range. If that was not enough, candle 5 has a bearish quality to it, which is just icing on the cake at this point. You can attempt to box these candles with pre-packaged names like hammers or shooting stars, but if you do that, you will completely miss the point of organic price action reading. You cannot interpret price with pre-packaged notions in the same way that you cannot interpret a text with pre-packaged ideas, unless you want to be purposefully unjust with the true meaning of the text. You must be able to make these sorts of comparisons that are beyond mere technicality. This is the sort of stuff that makes a great trader. One interesting detail I want you to focus is the relationship of the mirror lines with the upper tails of the candles around the entry. Observe how the downward sloping mirror line cuts through the tails as if it was describing them perfectly and as if it was a sloped support and resistance line also. In this case, the mirror lines in red use high number 2 and high number 4 as an axis. In this trade, the stop was placed above the high of our fractal candle because the sellers above that high are probably the same sellers that produced the pressure that created the candle 4 upper tail. The other interesting thing about this trade is the target, which in this case is a moving target based on a sloped support and resistance line. The idea behind a moving target is that the longer you are exposed in the market, theoretically speaking, the more you should get rewarded for that prolonged exposure. In that sense, sloped lines are great to fulfill that goal. I drew a downward sloping support and resistance line in light blue, and you can see how it acted as resistance and then it turned into support by the interactions marked by the light blue arrows. The target of this trade will follow the light blue line with the goal of increasing the target along with the exposure time in the market. Observe also that this sloped support and resistance line is not random. It's drawn using major highs and lows on the chart. Let's see how the market responds. Here we can see that our target was met, and the natural slope of our blue support and resistance line enabled the trade to slightly increase the final risk-reward ratio, which is always a good thing. If you wish to buy this method, check out the strategy store with links available in the video description and in the lower left call to action button. If you're not sure if this strategy is for you, I encourage you to check out the other 70 free videos I already uploaded to the channel with high-quality free information. If you like the work I do with these videos, don't forget to click the like button, subscribe to the channel and leave your feedback below in the comment section. Once again, thank you for watching and I hope to see you in the next videos.